Oh, here's a confusing one. This morning we got this set of numbers from Chewy, the online store for pet food and pet supplies that I have told you I like very much. Company reported a modest top and bottom line beat, also raising the low end of their full year forecast. At the same time, though, the guidance for the current quarter seemed to be a little light. Wall Street seemed to have a hard time figuring out what to make of these results. Stock initially dropped in pre-market trading, then it came roaring back. It opened almost up 7%. Then immediately pulled back from its high, spending the rest of the day fluctuating between positive and negative territory, with the stock only finishing up 1.5%. It was just crazy. So what comes next? Let's check in with Sumit Singh. He's the CEO of Chewy. Get a better read of the quarter, where it's going. Mr. Singh, welcome back to Mad Money.
Nice to be here, Jim. Thank you for having me.
Okay, so first, 2 years ago, you told us the stock was done going down. It was around $20. That was dead right. It's actually never looked back. I looked at this set of numbers. I didn't find them confusing. You're going about exactly what you said. You're continuing to dominate. You're taking share. You're on plan. Am I right that there was really nothing all that confusing about it?
Yeah, that's exactly right, Jim. We are really proud of the way that the team is executing. So, we grew revenue at 8%. That is more than 2 times the rate of industry growth in 2025. And profits grew, 30%. So 3 times the revenue growth. Free cash flow continues to accumulate, and we're looking forward to having a great year end.
And I think it's important. When I went out very positive and ever since been positive, all I ever hear about is, well, Jim, do you understand that Petco's got something like that? Do you understand that Amazon's got something like that? Do you understand that Walmart's got something like that? From what I can tell, you're beating all those guys.
Yeah, Jim, pets, as you and I have always appreciated, is a super emotive category. And in an emotive category like this, when you show up with being best in class in what we do, which is e-commerce, but then we deliver service levels that you can only expect at, the best local neighborhood pet stores. It kind of is the best of 2 worlds. It's the combination of scale and convenience of e-commerce and the personalization, on top of that. So, we have a very durable set of mechanisms. AutoShip. You and I, talked about AutoShip in 2019, and it was at 60% levels. We are now pushing over 84% of our sales through this quasi-subscription program. And since then, we've built a health ecosystem that continues to pull more customers, drive greater retention, and drive us towards premium growth and profitability. So overall, I feel like we've got a pretty good, durable, and differentiated set of levers.
Oh, I totally agree. Now, there was this kind of let's go over what the next quarter really meant. I felt what you said you're going to spend in order to be able to prudently grow. Other people were saying they have to spend because they have to spend, or that they're spending out of defense. But again, this is one where you have taught us, look, we have to spend. We want to continue to grow. And there's really nothing more than that.
Yeah, I think there's a couple messages that should be heard very, very loudly. One, we are growing, we're aggregating share across the industry, growing at more than 2 times the market. Number 2, Chewy does not require investment to continue to deliver, growing levels of top line. And then 3, it's not top line or bottom line for us, it's both. We are simultaneously delivering top-line expansion at the same time we're growing our margins. I mean, we delivered 100 basis points or 30% in profit growth in Q3. And for the year, we're going to deliver north of 25% profit growth while converting 80% of those profits into free cash flow.
All right. Well, that's exactly what I want. Tell me a little bit more about Chewy Plus. Seems that we saw you right when you were about to launch it. It's so far, so good?
We're loving Chewy Plus. So it's a program that is meant to give customers a chance to really get to know all of the offerings of Chewy in a very simple manner. It aggregates share of wallet very quickly for us, and it is really primed, to help us consolidate basket sizes and drive customer satisfaction and value back to consumers while consolidating share of wallet towards us. And so, early days, we've been at it for about 6 months. And we like the results so far.
You have always moved into the agencies that I've most wanted you to move into, which is, of course, veterinary. And veterinary seems to be working out better than we thought.
It really is. We have a pretty unique proposition. It's a model that is built on the core pillars of high-touch customer centricity. B, we have very high customer satisfaction scores. And then 3, we're really using sort of empathy and technology together to deliver experiences. So here's what we're observing. 4 out of 10 customers that are walking into our locations are net new to Chewy, right? In a very short amount of time, half the customers that are walking in are then attaching other categories like pharmacy or health and wellness supplements from Chewy.com. So not only are we aggregating share of wallet quickly, we're also seeing net customer incrementality and brand scores continuing to lift up, whichever market we're launching CVC in. Now, so we're quite excited about it.
Right. One thing I've not seen it myself. I mean, when are we going to see them in Brooklyn, for instance, or New Jersey, where I spend some time in both?
Yeah, we'd welcome you in any of the locations we have them currently. So currently we've got them in 4 states: Florida, Atlanta, Denver, and Texas, or Colorado and Texas. And what you should expect from us as we move, we've actually just launched one in Phoenix last week, so we're now in Arizona as well. You should expect us to densify our footprint as we move into next year. What that does is it gives us really good leverage from an OpEx point of view, gives us marketing benefits from an in-ground awareness point of view, and allows us really good cross-training opportunities for our staff. So, look for these to continue to densify, and we welcome you in any of these locations.
Thank you very much. I hope I don't have to use you, but that's good news. Now, how about Get Real? How are we doing with the fresh food offering?
Fresh and frozen, I would categorize this as the new format, that continues to support this trend of humanization and premiumization that we've talked about for so long. And so we see this as a market that is going to be in the billions over the next few years. And, we felt that Chewy has a right to participate, and we're doing so by bringing forward, a private label product called Get Real. Customer reception has been great. More so than that, dog reception has been great, and the humans are loving it as well.
All right.
NPS scores are great. Product ratings are good. We're excited about what's to come.
Finally, consumers spending more or less on their pets this year.
Consumer spending, well, on our platform, consumer spending's up. As you can tell, we're aggregating NSPAC, growing it at 5%, levels, in addition to picking up an incremental 5% customers from the market, which is the composition of our revenue growth. So consumers, continue to spend on consumables and health. They're still a little bit weary of discretionary, but at Chewy, we grew discretionary at 18% year over year. So we're happy about those results.
Well, that's all I need to know. Another good quarter. I'm not confused about it at all. That's Sumit Singh, CEO of Chewy. Sumit, it's great that you called the bottom when you were on a couple years ago. And to me, I don't see a top. So congratulations.
Thank you. Really appreciate it.
Very good. Man, I'm going to be back after the break.
Coming up, with Deere's Investor Day in the rear view, is it time to jump back on board with the machinery maker? Cramer makes the case to buy into a bounce back. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.